Welcome back again, Chris. It's always a pleasure having you here at BullionStar.
Oh, I'm very happy to be here, Luke. Thank you.
You know, the last interview we had, I think 2 years ago, was one of our most well-received interviews here. And some of our audiences have also expressed their gratitude for the work that you're doing. So just wanted to convey that to you.
I'm glad for the attention you've helped call to us, Luke, and I'm very delighted to be back.
Well, my aim for today is really to build on that previous conversation that we had 2 years ago, and you know, where you led us through what was happening behind the scenes in the gold market. So that's something that I want to touch on today as well. But maybe before that, to start with, for the benefit of some of our newer audiences, may I request that you introduce GATA and what GATA stands for?
Sure. The Gold Antitrust Action Committee was founded back in 1999 to expose and clamor against and protest the suppression of gold prices and related prices by governments and central banks. At the outset, we were a little mistaken. We thought that the price suppression scheme was just your ordinary antitrust scheme being undertaken by the private banks in the market. Very quickly we realized from our research that gold price suppression was actually long-standing Western government policy going back for 50 years or more. It took us a little while to get the documents for that, to figure that out. Since that time we have amassed huge documentation of this policy, some of it very current. And much of that documentation, BullionStar has to get credit for because of your support for, you know, Ronan Manley and Koos Jansen and others. So we collect the documentation of gold price suppression policy by governments and central banks. We publicize it. We protest it a couple of times. We've brought lawsuits against it. We speak about it at conferences like the one I'm attending here in Singapore, and we'll be attending one in Hong Kong in another week or so. And we try to mobilize people against it and hope that we can restore the world to free and transparent markets, because the gold market really is the key market in the world, because it helps set the price and value of all capital, labor, goods, and services in the world. If you're rigging the gold market, you're rigging everything.
I think one of the great things that you guys are doing, amongst all the other good things that you guys do, is that you collate, you know, these hard documents with pure evidence showing manipulations or interventions in the gold market, and you make it easily accessible, and you bring that to the world's attention. So I'd really like to commend you guys for doing that. On that note, do you feel that should GATA offer some sort of a reward for people who volunteer this information, and how might that take?
Well, if we had more cash, I think we could offer rewards, I suppose, to central bankers to come forward. But the thing is, Luke, central banks create money to infinity. I think they would laugh at any such offer from GATA, because they can pay themselves off anytime they want to. And in fact, you know, we have collected so much documentation from central banks themselves and from the memoirs and speeches of central bankers that I can say they've already come forward. That we know about the gold price suppression scheme in large part because central bankers themselves have put it on the record, admittedly when they didn't think anybody else was listening, when they thought that only their friends in central banking were listening. But we have many admissions from central bankers now. The problem is not getting admissions from central bankers. The problem is getting the financial world, the financial news media, and the public to look at the admissions we have.
Now, over the years, GATA has been involved in, you know, bringing gold antitrust cases to the U.S. courts, or at least supporting some of these types of approaches. How effective has GATA been in doing this?
Well, we've been involved directly in 2 lawsuits, and one we lost, one we won, at least technically. The first one we brought back around 2000, 2001 through our consultant, Reg Howe, who was a lawyer in Massachusetts in the United States. He brought a case against the Bank for International Settlements, the Fed, the Treasury, bullion banks, accused them of rigging the gold market in a way that diminished the value of the privately held shares in the Bank for International Settlements back then. The bank was trying to expropriate the shares back then, and the price they were offering for the shares, Reg argued, did not represent the true value of the gold that was held by the BIS, because the BIS was complicit in rigging the gold price. We did not win that case. The judge granted the government's motion for summary judgment dismissal. However, something very important in our favor happened in that case. There was one hearing in that case. I attended it in Boston back in 2001. And in that case, at that hearing, an assistant U.S. attorney speaking for the U.S. government in support of the government's motion for dismissal of the case asserted that without admitting the complaint of the plaintiff in the case, the government claimed the power to do everything that the plaintiff complained of about rigging the gold price. That is, an assistant U.S. attorney got up and said that under the Gold Reserve Act of 1934, as amended in the 1970s, the U.S. government has the power to rig the gold market surreptitiously, and there's nothing anybody can do about it. Well, that was an admission.
Yeah.
We got it out of an assistant U.S. attorney in Boston. So even though we didn't win that case, we got an admission out of the government that it claimed the power to rig the gold price. Though it did not admit doing so at that moment, the government claimed that it had the power to rig the gold market. And then we brought a Freedom of Information lawsuit against the Federal Reserve and U.S. District Court for the District of Columbia about 10 years ago. And we wanted access to the Fed's gold documents. The Fed would not really give us very many. And we took the case to the judge, and the judge ruled that most of the Fed's documents on gold were exempt from disclosure under the Federal Freedom of Information Act. However, in the course of that litigation, of our Freedom of Information complaint against the Fed, we got a letter from a member of the Federal Reserve Board of Governors, Kevin M. Warsh, who was kind of acting as a sort of hearing officer on our Freedom of Information complaint to the Fed. Warsh wrote our lawyer a letter acknowledging that the Federal Reserve Board has secret gold swap agreements with foreign banks, and there is no way in hell they were going to ever let the world see those agreements. So we have a letter from the Fed's Board of Governors member acknowledging that the Fed has secret gold swap agreements with foreign banks. Now, we technically won the lawsuit because while the judge found that the Fed did not have to disclose most of its gold documents, the judge found there was one gold document that the Fed improperly withheld from us. It was the minutes of I believe it was the G10 Gold and Foreign Exchange Committee meeting some years before, in which the minutes showed that the G10 central bankers were secretly discussing how to coordinate their gold market policy, presumably to control the price. Since that document, the judge said, had to be released to us, and the Fed had withheld it, the Fed lost the case, and the judge ordered the Fed to pay GATA the court costs of something like $2,500. So while we didn't really get much out of the Fed in actual documents, we did get one, and really of greater satisfaction to us was this check that was issued by the Federal Reserve Bank of Richmond, I guess, for $2,500 payable to GATA for court costs for their violating the Freedom of Information law in our case. And we still proudly display this check on our internet site.
Yeah, that's one for the archives for sure. Now, we both know that early this year in January, the CFTC had fined UBS, Deutsche Bank, and HSBC for spoofing the gold futures market prices. I think UBS was fined something like $15 million, Deutsche Bank was fined $30 million, and HSBC was fined $1.6 million. Now, with these fines, do you think they are adequate compared to the damage that has been done to the markets?
Well, I'm not going to question the amount of the fines as against those banks particularly, because I'm not sure that the spoofing that those banks traders did in the gold market caused what I consider the big damage to the gold market. Gold has been damaged far less by this spoofing that has been done by bullion bank traders than by Western government policy, which has been to suppress the gold price for going back at least 50 years. The Western governments have been acting through investment banks and bullion banks, getting cover for their surreptitiousness in the market. The governments are our big target here. I mean, we're glad to see the exposure of the investment banks' misconduct in the market, but the misconduct of the investment banks has done just a tiny share of the damage to gold-producing countries and to gold investors and to free markets around the world. The real damage has been done by governments, which often act through the investment banks and the bullion banks. But again, as that Assistant U.S. Attorney said in U.S. District Court in Boston back in 2001, under the law in the United States, the U.S. government has the power, claims the power, to rig not only the markets in the United States, but any markets throughout the world. That's the United States law. I mean, that's the essence of imperialism. The United States law gives the U.S. government the power to rig any country's markets around the world. I would encourage other countries to wake up to that.
Now, on the topic of rigging markets, we know that the same three banks that I mentioned earlier are also involved in a class action lawsuit in New York. Do you have any updates about what's going on with that?
Yes, the bullion banks have been sued in a class action for rigging the gold market by a group of investors represented by, I think, 2 or 3 law firms. That lawsuit elicited an offer of settlement from Deutsche Bank in the amount approaching $100 million. Really, it was effectively an admission of rigging the gold market. Deutsche Bank also offered the plaintiffs to provide evidence against other banks that were involved with Deutsche Bank in rigging the gold market. Not long after that offer of settlement and that confession were made, the U.S. Justice Department intervened in the case, asked the judge presiding in it to suspend discovery and deposition by the plaintiffs so that the Justice Department could conduct its own investigation. The Justice Department was never interested in investigating gold and silver market manipulation before, but only when Deutsche Bank was about to blow up the whole scheme by settling and providing more evidence that the Justice Department come in and ask to suspend discovery and deposition. That case remains, to the best of my knowledge, suspended by the Justice Department's motion to intervene. Now, given the result of the CFTC fines a few weeks ago, we have to wonder whether that resolves the U.S. government's interest in suspending further discovery and deposition in the class action case. The last I heard from one of the lawyers in the case was that the suspension order on discovery and deposition had not been lifted, but they were going to raise the issue in court soon. We will stay on top of that issue, and if there are developments, I hope we'll report them. But to the most recent knowledge I have was that discovery and deposition in the class action lawsuit in New York remains stalled.
Well, I'll be keeping a lookout for any updates on GATA's website on that. Now, if I were to turn the interview over to the gold price at present, now we both know that the gold price is set or is derived from the London OTC paper markets and the gold COMEX markets, which is also a paper market. Really nothing to do with physical gold trading. Do you foresee this changing in the future?
Well, I hope so. I make no predictions, Luke. I've been in on this struggle for almost 20 years now, and I can't really give people any specific hope other than you know, truth and justice usually prevail over the millennia. You know, unfortunately, most of us are not going to live that long. But there are options for ending the gold price suppression scheme. It could be ended by countries fighting each other over it. It continues now only because all the major central banks of the world, including China's and really even including Russia's, are cooperating in it. I think at some point one of them will pull the plug just because of international disagreements. Really any central bank with a substantial foreign exchange reserve could pull the plug on it just by selling U.S. Treasury bonds and buying real metal and taking it out of the banking system. It could end that way. It could end by agreement among the central banks for an international currency revaluation. Those things do happen every 2 or 3 decades or so. The U.S. economists and fund managers Paul Brodsky and Lee Quaintance wrote a study a few years ago arguing that the international central bank scheme with gold right now probably is to redistribute world gold reserves more fairly among the nations so that the nations that have big US dollar denominated foreign exchange reserves are able to get greater gold reserves to hedge themselves against the inevitable devaluation of the US dollar, and that when central banks have redistributed world gold reserves among themselves to their own satisfaction, they will undertake a currency revaluation. They will drive the gold price way up by offering to tender for gold at much higher prices and thereby reliquefy themselves and hedge themselves against what they see as the inevitable devaluation of the US dollar. A revaluation also might come about simply by ordinary physical offtake from the gold market in which retail investors may participate. The world's gold supply has suffered short squeezes before. In March 1968, the London gold pool collapsed. It was an open scheme of disordering of gold by Western central banks to keep the dollar gold price at $35 an ounce. Gold was running out of the central bank reserves for the London gold pool in late 1967, early 1968. And the gold pool had to be shut down because the central banks were losing too much gold, more gold than they were prepared to lose. And then in 1971, President Nixon ended dollar convertibility to gold for other countries. And that's because the gold was again running out too fast. So, you know, if all the world's investors rose up right now and came to BullionStar and other gold dealers and demanded physical gold and stopped accepting paper gold, unallocated paper gold claims, and if they began to convert their paper gold claims to real metal, took it out of the banking system, there would be a short squeeze quite unlike any the world had ever seen. So retail investors can play a role in this too. But I think those are the 3 options for the end of the scheme. I suspect the most likely option is the option of central banks cooperating to devalue their currencies, to revalue gold upward, and thereby to devalue debt, because the world's debt is really starting to devour the world's economy. Scottish economist Peter Miller wrote a paper 10, 15 years ago in which he noted that a fiat currency system tends toward infinite interest payments on infinite debt. And debt has to be devalued periodically in a fiat currency system so that there's not a catastrophic debt deflation. I think the central banks know this, and they will devalue their currencies and revalue gold at some point, probably to a much higher level at which they can resume the gold price suppression scheme at a much more sustainable level for another 50 years of rigging markets.
Now, Bill Murphy from GATA has referred to the Gold Cartel being taken out on a stretcher. What does that mean?
Well, I think Bill sees that certain investment banks are always massively short gold. If there is ever a short squeeze, they will be in trouble. In fact, there was a short squeeze when the Bank of England began announcing its gold sales back in 1998. That was a short squeeze. The Bank of England did that to rescue some bullion banks that had gotten into the gold leasing business with central banks, gone terribly short, and then the market turned around $300 an ounce, and they needed real metal to return, and that's when the Bank of England sold half its gold to make sure that the bullion banks did not collapse, did not become insolvent, did not go bankrupt. So that was an instance where the gold cartel wasn't quite taken out on a stretcher, but it was rescued by the ambulance from the Bank of England and gotten to the hospital real quick. I don't think central banks will let bullion banks fail. Bullion banks provide cover to central banks, and they would not be in the gold market as heavily as they are if they did not have government backing. Maybe central banks can be carried out on a stretcher a little faster if retail demand and Eastern Central Bank gold demand increases enough. But since I think this is at bottom, this is a government suppression scheme just using intermediaries, government will never be carried out on a stretcher, unfortunately, but government's behaviors can be changed, can be made less totalitarian, and I think that's really what we're working on.
Now, GATA has done some fabulous research showing some of the central banks and nations that might not own as much gold as they claim to have. But what about the other extreme? What are some nations that have more gold than what they care to share?
Yeah, well, the true location and disposition of official government gold reserves are secrets far more sensitive than the location disposition of nuclear weapons. Nuclear weapons can only destroy the world. Gold reserves control the world because they help central banks and governments control the currency and commodity and bond markets. So we will never be permitted to know which government has exactly how much gold and where it is. Now, we know that because there's a government document to that effect. It is the secret March 1999 report of the staff of the International Monetary Fund. The staff report says that central banks do not distinguish their gold loans from their gold in the vaults, because if the market had that information, the market would interfere with central bank surreptitious interventions in the gold and currency markets. And so the IMF allows central banks to just report one line item for gold reserves, even though half of that gold may have been leased out, there may be multiple claims to it, it may have been hypothecated and rehypothecated 100 times. The IMF lets central banks report it in their reports to the IMF as if it's all in the vault, when it's not all in the vault. And the staff report of the IMF said that this misleading reporting is sustained because central banks need to conceal their surreptitious interventions in the gold and currency markets.
Well, Chris, you just answered my next question about gold lending and the secrecy that shrouds that, so thank you for doing that. Now, a fun question for you. Do you think that central bankers are more terrified of cryptocurrencies that they don't issue and they can't control, or physical gold that likewise they don't issue and they can't control?
I suspect they'd be more scared of physical gold because physical gold is disseminated among central banks. If you got a central bank that decided it did not want to cooperate anymore with the gold price suppression scheme, then that would be big trouble for all the other central banks. Whereas cryptocurrencies, I think, are more easily controllable by central banks, or by governments anyway. Governments can shut down the cryptocurrency exchanges. They can interfere with the internet. I just came from Vietnam, and I saw from my own archive that I maintained of some of my work on the internet, Yahoo groups. I can't access Yahoo groups in Vietnam because the Vietnamese government has blocked Yahoo groups in Vietnam. I think cryptocurrencies do scare central banks because it's a competitive form of money, maybe a good form or a faulty form, but any alternative forms of money have to give central banks concerns. But I suspect that central banks will have more concern about gold than about cryptocurrencies, because gold has a physical existence. Cryptocurrencies vanish when the power goes off.
Now, if I were to turn our attention to the Lbma, in 2015, Lbma stated that they would publish trade reports for gold and silver as part of their fair and efficient market reviews. It's now 2018, and none of that has happened yet. 2016 didn't happen, 2017 didn't happen, 2018 didn't happen, maybe 2019. What do you think is the reason for all this?
Well, this has been exposed by BullionStar's consultant Ronan Manley, who has done magnificent work for many, many years. In fact, I believe it was Ronan who discovered that secret IMF report that I was just talking about. One has to assume that the Lbma keeps postponing its disclosure of daily gold trade data because that data would cause trouble if it was out in public hands. There's more and more trading of gold in London that's being supported by less and less real metal. And I suspect that disclosure of that trade data would increase the strain on the gold market. It would tend to illuminate the short position in gold in the London market, and the vulnerability of the bullion banks in the London market, which is an issue that Ronan often has written about. Ronan also reported the other day that the Lbma's daily gold and silver price fixings were going to be delayed by 14 hours now. That also suggests that the data is becoming more and more sensitive to the London bullion banks. There's no good reason for it. The data is available. Why couldn't it be made available promptly? Probably because certain days it needs to be tweaked and falsified, just as the U.S. Consumer price figures need to be tweaked and falsified so people don't find out what's really going on.
Now, GATA has put on some fantastic conferences in the past, and what comes to mind is the 2011 London conference, and that was of particular importance, I think. Now, does GATA have any plans for any of these future conferences?
We don't have one now. We occasionally are urged to do another one. We would need to get a fairly large sponsor for doing something like that again. And I'd prefer not to go back to the same people all the time. Now, if Newmont Mining and Barrick Gold wanted to sponsor the next GATA conference, we would throw ourselves into that project with enthusiasm. It would be a lot of work, and I don't think we could do it without a commitment of a couple $100,000 to get it started. Mm-hmm. And maybe there's one or two people we could ask for that, but I'd have to duck when the answer came.
Okay. So what's in the plans for GATA? What are you guys looking forward to?
Well, we're looking forward to more exposure of the documents that we have generated. One big issue for us right now is the work of our consultant in London, Robert Lambourne, who's an expert on the Bank for International Settlements. He watches the monthly reports of the BIS and has reported that over the course of the last year or so, the BIS's gold swaps position has gone from 0 to more than 500 tons. Now this suggests a certain amount of desperation in the central bank community to move gold around the world and allocate it in such a way as to keep the gold market under control. Now, why is the BIS in the gold swaps market? I mean, the BIS represents only other central banks. Mm-hmm. When the BIS arranges a gold swap, carries it on its books, it's doing this only because it's in the interest of its members, the central banks. I asked the BIS press office a few weeks ago if it would comment on Lambourne's calculations of the BIS's dramatic return to the gold swap market, the gold swap business in the last year. Would the BIS tell me, does Lambourne have it right? And what is the purpose of these gold swaps? The BIS press office answered me very quickly saying I should drop dead. That they don't talk about this stuff, and that we could find more on gold in their annual reports, which is barely true. The BIS says very, very little about gold in its annual reports, and that more gold information was available from the central banks. Well, I invite you to try to pry any of this information out of the central banks, especially in light of the secret March 1999 IMF staff report saying that they falsify their gold data because if they told the truth, then the market rigging that they do would blow up.
Yeah. Well, Chris, it's always a joy having you here at BullionStar, and just thank you so much for sharing your work with us, and thank you for all that you've done for the gold markets.
Oh, thank you, folks at BullionStar, for all that you guys do, because the publicity that you've provided to the research of Ronan and others has been just crucial. So I'm delighted to be here, and I'm grateful to you guys too.